Good morning, all of you. So, in last session, we have seen basics of income tax. What is the meaning of income tax? Why we are learning this? Income tax is okay. Let me ask you: income tax is direct tax or indirect tax? Class. Okay, very good. Yes, direct tax. So, what is the meaning of direct tax, indirect tax, income tax, and GST? So, GST is indirect tax. Then, why government is levying income tax? The reason behind that. And today we are going to start with the steps how to levy income tax. Income tax will be levied, okay? But how it will be levied? So, just a minute. Let me share the screen first. So, first of all, screen visible? Okay. Okay. So, first of all, levy of income tax. Income tax is a tax levied on total income of previous year of every person. Section 4. Look, first of all, in income tax, you are supposed to remember all these sections. Okay, it will be beneficial for you to remember the sections. A person includes individual, HUF, association of person, body of individual, firm, company, etc. So first of all, in this particular line, we have to first understand what is the meaning of total income. What is the meaning of total income? Then, what is the meaning of this previous year? We have to learn line by line. Okay. And then, what is the meaning of person? So, all these definition we will look into one by one. But first of all, we have to identify how to calculate the income. Okay. So, a person includes individual, HUF, AOP, BOI, firm, company. We will look all the definitions one by one. But first of all, what is the meaning of total income and tax payable? So let's take one by one. First of all, income tax is levied on SSE's total income. Here, one more terminology, SSE. SSE's total income. Such total income has to be computed as per the provisions contained in Income Tax Act 1961. Income Tax Act 1961. The act formulated on 1961. Let us go step by step to understand the procedure for computation of total income of an individual for the purpose of levy of income tax. So these are the steps that will be followed to identify computation of total income of individual only. Of individual only. Individual means like a person. A person means an individual person like me, you, parents, means normal person. Okay, so calculation of total income of an individual. So in last lecture we have heard this terminology residential status. So first of all we have to identify the term residential status. What is the meaning of residential status? So the residential status of a person has to be determined to ascertain which income is to be included in computing the total income. Which income is to be included in total income. Now what does that mean? Now for example, I am a resident of India. Okay, the whole year I was in India. In previous year I was in India, but simultaneously my business was running. My business is right now running in Australia also. I am earning from my business in Australia also. So whatever I earn in India, that will be my income. But whatever I earn in Australia, that is also, that will be included in my total income. How? How it can be determined that the income generated outside India will be included in that person's income or not? So it will be determined on the basis of person's residential status. So now the residential status is classified into three parts. Resident, deemed resident, and then non-resident. Resident means resident of India. Now, this resident and deemed resident subdivided into two parts. Resident and ordinarily resident. Then resident of India, but not ordinarily resident. The person is resident in India, but not ordinarily resident. He is in India in this year, but we don't know that he will be in India in next year or not, or in past year he was not in India, but right now in this previous year he is in India. So he is resident in India, but not ordinarily resident. This is the separate points. Okay, residential status is separate point in this particular module 1. So don't worry, we are just right now looking for the brief idea of your income tax module. Now non-resident means the person who is a non-resident to India, means he has never come to in India or come for very short time period in India, and then he earned something in India and then he or she went. Okay, now in case of an individual, the duration for which he is present in India determines his residential status. The number of days he or she has spent in India will be considered for residential status. Based on the time spent by him, he may be resident and ordinarily resident, or resident but not ordinarily resident, and non-resident. So you have to remember these three terms, A, B and C. Either an individual will be resident and ordinarily resident but not ordinarily resident, or non-resident. Here in short form, resident and ordinarily resident. we can write down that resident and ordinarily resident. How it will be computed, that we will discuss later. Right now, just understand the term. Then resident, but not ordinarily resident. RNOR, and then non-resident. Sorry. Okay. Resident and ordinarily resident. Then resident, but not ordinarily resident, and then non-resident. NR. Okay. There are some conditions that, like in ROR, there are two conditions. If one of these two conditions satisfy, then he will be considered as resident and ordinarily resident. Then again, in RNOR, there are two conditions. If it doesn't satisfy, then he will be considered as resident but not ordinarily resident, something like that. That we will discuss later. So after considering the residential status, right now, let me give you one example. That, for example, Mr. X, sorry, let me write down over here. Mr. X, for example, is resident and ordinarily resident. Okay, we have identified that, for example, in previous year 2020-21, he stayed in India, let's say for full 365 days. He was in India for 365 days. So he will be resident and ordinarily resident. Okay, now done. Now Mr. X is a salaried person and he has earned 6 lakh rupees. Simultaneously, he has business, and from business he earned 3 lakh rupees. Okay, so the total income will be 9 lakh rupees. So for Mr. X, this is the computation. This is nothing but computation. Now, but sir, how can we identify that a person has which type of income? Is there any heads? So yes, classification of income under different heads. These are the different heads. Salary head. You have separate chapters of this head. Okay. Salary head, income from house property, profit and gains from business or profession, PGBP. In short form, it is said PGBP, profit and gains from business and profession or profession. Then capital gain, and then income from other sources. Now, what is the meaning of salary? A person is an employee of one company, let's say Reliance or Tata or Infosys or private firm. Okay, so he will earn salary from that particular owner or employer. So it will be considered under the first head of income. First head of income means salary. First head of income means salary. Next, for example, in this example, Mr. X has 5 residential plots, 5 residential plot, house property, 5 house, and he has given that house. So on rent income will be considered under the head HP, house property, income from house property. Let's say from one house, the person is earning 1 lakh rupee. So 1 lakh multiplied by 5 house, 5 lakh rupees. So total income will be 14 lakh rupees. So this is how it will be calculated. So second head of income is income from house property. Income from house property. Either person or an individual is associated with business of like FMCG or plastic or toys, something like that. Okay, or he will be in profession like doctor, advocate, chartered accountant, company secretary. Okay, something like that. So that income generated from his business will be considered under the third head of income, that is profit and gains from business or next point. Next point is capital gain. Now what is the meaning of this capital gain? Now for example, out of these 5 houses, Mr. X has sold. Okay, for example, Mr. X has 6 houses, but he has given 5 houses on rent, and then he has sold 1 house property in this previous year 2021. So whatever income by selling that property, let's say property sold by 15 lakh rupees. Okay, and he has purchased that property, let's say for 12 lakh 50,000 rupees. 12 lakh 50,000 rupees. So the net amount 2 lakh 50,000 rupees will be his income. I am giving you the basics. Okay, we are not right now doing the capital gain, but we have just, I am just giving you the idea how it will be done. There are so many points that will be considered, but that we will discuss in that chapter, that particular chapter, not here. And now last one, rest of the incomes that are not considered in this 4 head of income. Okay, so sources, other sources. For example, Mr. X has savings bank account in SBI, and he is receiving savings bank account interest. Let's say he has received 10,500 rupees. So that 10,500 rupees will be taxable in IFOS. Income from other sources. Why? Because that savings bank interest is not salary. That will not be considered in rent house property. That will not his business. That's not his, and it is not capital gain. Okay. So the rest of the incomes like dividend income, fixed deposit income, fixed deposit interest income, savings bank interest income, gift received, all these income will be considered in other sources. Clear? Are you getting this or not? 5. Is there any doubt in these heads of income? Please, class, reply in chat box. Now, first of all, introduction part, and then introduction part and exempt income. Now, what is the meaning of exempt income? Exempt income means income in which you are not supposed to pay any tax. You are not supposed to pay any tax. For example, agriculture income. In agriculture income, you are not supposed to pay any tax in India. For example, if you let's say Mr. X is farmer and he is earning 1 crore rupee by farming business, then he has to pay 0 rupee. Not a single rupee will be levied from him. Your module 1 income tax right now we are doing. Then residential status. What we have, this that will be your module number 2. Resident and ordinarily resident, resident but not ordinarily resident, and then non-resident. Types of residential status and its determination. And then incidence of tax on the residential status. How tax will be calculated. Each head of income is your separate module. Each head of income is your separate module. Salary. Number 4 is income from house property. And module number profession. This will be covered in your semester 5. In semester 4, this is your first module, capital gain. And this is your second module, income from other sources. Okay. So what about the rest of the modules, sir? Here you will learn clubbing of income, set off and carry forward, TDS, TCS, how to file income tax return. That will be your module number 3, 4 and 5. Okay. You can refer these books. T.N. Manoharan, Vinod Singhania, Girish Ahuja. But in class, we will refer the module ICAI. Okay. You can further refer these books. Screenshot. That PDF file I will upload in your classroom. I will send you the invitation also. Okay. Accept that invitation and you will. If you want to take the screenshot of this Excel, then please. Now, afterwards, computation of income under each head. Computation of income under each head. Okay, I have to share the Excel simultaneously. Give me 1 minute. Okay, so this will be your gross total income. Now, computation of income, all the incomes will be computed and total income will be found out. Exemptions. There are certain incomes which are wholly exempt from income tax. For example, agriculture income. These incomes will not form part of total income. The agriculture income anywhere over here. I have given you the example that, for example, Mr. X is earning 1 crore rupees from agriculture income, but I haven't written agriculture income over here. Why? Because that will not be part of your total income. That will not be part of your total income. Okay. Why? You will understand it step by step. Now, also, for example, house rent allowance, education allowance, these incomes are excluded only to the extent of limits specified in the Act. Now, house rent allowance and education allowance are part of your third chapter, that is salaries. Okay, so we will discuss this HRA, education allowance, in module 3. These incomes are excluded only to the extent of limits specified in the Act. The balance income over and above prescribed exemption limits would enter computation of total income and have to be classified under relevant heads of income. Which heads of income? Heads of income. Okay, these 5 heads of income. But PCC, it is income which do not form part of total income. But here it's our module number 1. So don't worry. And this is what we have discussed. 5 heads of income and what will be covered in this head. After of income in each head. Now deductions. It is your chapter number 7, and here it will be your third chapter. Third, not here. There are deductions and allowances prescribed under each head of income. For example, while calculating income from house property, municipal taxes and interest on loan are allowed as deduction income. For example, Mr. X has taken loan. Mr. X has taken loan and he is paying the loan installments. So whatever interest amount of that loan installments will be allowed as deduction. So that will be deducted from this 5 lakh rupees. So while calculating income from so these are the deductions that are allowed. Written that deductions from gross total calculate the deductions. Is 2 lakh rupees. Okay, we don't know what is the meaning of deductions. Okay, right now we are just writing down, we are just preparing the computation of total income. So the remaining amount will be considered as total income. Okay, remaining amount will be considered as total income. Now, point number 4. clubbing of income of spouse and minor child. This is not part of your syllabus in semester 3, okay? So we will just read it. In case of an individual, income tax is levied on slab system, on total income. That you don't know right now. The tax system is progressive in nature. Tax system is progressive in nature. How? We will discuss it. Then, as the income increases, the applicable rate of tax increases. Then, some taxpayers in higher income bracket have tendency to divert some portion of their income to their spouse. For example, if Mr. X is owner of one house property, okay, 5 house property here. So he has transferred one house to his wife, one house to his wife without any consideration, free. Okay. And Mrs. Wife has given that house property on rent, 10,000 rupees per month. So for 12 months, it will be 1,20,000 rupees. So one house property transferred to his wife free of cost, and she has given that house property on rent for 1,20,000 rupees. So that 1,20,000 rupees will also be included in total income of Mr. X in this 14,50,000. Why? Because that house property has given free of cost. It is given free of cost to Mrs. Wife. Okay. Right now, no need to understand all these things. We are just looking for the steps how we will compute the income tax. Then set off and carry forward. Set off and carry forward means past year loss. Past year loss past losses will be set off against this total income, and it will be carry forwarded. In set off from past year, and it will be carry forwarded over here. Let's say Mr. X has the loss of 1 lakh rupees in last year. So that will be set off against this 14,60,000 rupees, and the remaining amount will be 13,60,500 rupees. It will be something like that. And then computation of gross total income, that we have already done. Computation of gross total income. Then deductions from gross total income, that we have considered. What are these deductions? This is your module number 3, exact, but in semester 4. In semester 4. Now total income. This is what we are looking for. Step number 8. Computation of total income, then determination of residential status, that we have determined over here. That he was in India for 365 days. So he will be resident and ordinarily resident. Okay. Then classify income under 5 heads. So we have classified all the incomes in 5 heads. Okay. Then compute income under each head, applying the charging and the deeming provisions and the providing for permissible deductions and exemptions available. So we have given all the deductions and exemptions available. Then set off and carry forward. I have told you that he will be allowed to set off the loss. Then compute gross total income. Then gross total income will be computed. And then deductions from gross total income. This is deductions from gross total income. And finally, you will come to the total income portion. Here it is. Okay. Now, how tax will be calculated? Application of application of rate of tax on total income. The rate of tax for the different classes of SSEs are prescribed by the Annual Finance Act. Now, we have seen that tax is on progressive basis. Here we have seen the tax system is progressive, right? How it is progressive, that we are discussing now. This is the most MP part. Okay, if you don't understand this, then it will be very difficult for you to understand the income tax. First of all, for individuals and HUF, there is a slab rate or basic exemption limit. Basic exemption limit. At present, it is 2,50,000 rupees for individuals. What does that mean? Up to 2,50,000 rupees, an individual is not at all required to pay any tax. This means that no tax is payable by individuals with total income up to 2,50,000 rupees. So, for example, if Mr. X, is earning here, let's say 1,80,000 rupees, then he has to pay no tax. He will be under basic exemption limit. So no tax will be payable for Mr. X. But beyond 2,50,000, so those individuals whose total income is more than 2,50,000 but less than 5 lakh rupees have to pay tax on their total income in excess of 2,50,000 rupees at the rate 5%. At the rate 5%. So if I want to write down here, up to rupees 2,50,000, no tax. Okay, clear? But up to rupees 5 lakh, beyond 2,50,000, beyond 2,50,000 means 5 lakh minus 2,50,000 rupees, 2,50,000 amount. If you do the total, it will be 5 lakh. Okay, up to 5 lakh rupees, the tax rate is 5%. The tax rate is 5%. So the tax will be levied 2,50,000 multiplied by 5%. So the total tax, total amount will be 12,500 rupees. Okay. Here more than rupees 2,50,000 but up to 5 lakh. Done? Now next line. This is what written over here. First of all, let's read this. Those individuals whose total income is more than 2,50,000 but less than 5 lakh rupees have to pay tax on their total income in excess of 2,50,000 rupees at the rate 5%. However, resident individuals in this slab enjoy rebate of lower of 12,500 rupees or tax payable under section 87A, whichever is lower. Here it is written whichever is lower means lower of 12,500 or tax payable. If you check here, that max to max amount payable will be 12,500 rupees. 12,500 rupees. Now section number 87 says that if your total income is up to 5 lakh rupees, if your total income is up to 5 lakh rupees, then you will enjoy the benefit of rebate. Now, what is this rebate? Rebate means you are not supposed to pay tax up to 12,500 rupees. Now, let's say I'm giving you the example. Let's say Mr. Raj, Mr. Syam, Mrs. Gupta. These are the random people. Okay. For example, Mr. Raj total income is 4 lakh 50,000 rupees. Mr. Shyam total income 3 lakh 25,000 rupees. Mrs. Gupta total income 5 lakh 2,000 rupees. Okay. Now, up to we have learned that up to rupees 2 lakh 50,000, no tax. No tax will be levied. We have seen over here up to 2 lakh 50,000, no tax. But the same line, more than 2 lakh 50,000, but up to 5 lakh rupees. So here total income 4 lakh 50,000 minus 2 lakh 50,000 rupees. What will be the income? 2 lakh rupees. The same figure 75,000, and the same figure over here 2 lakh 52,000 rupees. Now tax will be 5%. Tax rate will be 5%. By 5%. So here it will be 3750, here it is 10,000, and here it is 5 lakh minus 2 lakh 50,000 rupees. 2 lakh 50,000 exact. Sorry. Multiply by 5%. That I forgot. Done. Now rebate under section 87A will be here. Max to max rebate will be available 12,500. 12,500. Or the tax, or the tax, whichever is lower. Whichever is lower in these two, whichever is lower. So which amount is lower? 10,000. So it will be allowed as rebate. Here 3750. Here both are same, either tax amount or rebate amount. So max to max rebate available will be 12,500 rupees. So tax payable will be 0. Here 0, here 0, here we can't say anything. Why? Because it is more than 5 lakh rupees. So we have to calculate the tax for 2,000 rupees. Why? Because we have calculated for 2 lakh 50 plus 2 lakh 50. Now still 2,000 is remaining. Okay, so forget this thing. I have given you the example only because to let you understand the next part of this particular paragraph, third part. But right now focus on it, Mr. Raj and Mr. Syam. Total rebate available to Mr. Raj will be 10,000. Total rebate available to Mr. Syam is 3750. It's not like that. Total rebate available 12,500. So he will be eligible for refund. Okay. Why? Because tax payable 10,000 है. Rebate 12,500 मिल रहा है. So 2,500 वापिस मिलना चाहिए. It's not like that. You can avail the rebate, but max to max to up to the amount of tax. Up to the amount of tax. ખ્યાલ આવે છે બધાને? Are you getting this class? Please reply. ક્યાંય doubt હોય, you can stop me immediately, okay? It's not like that, first of all I complete the topic and then you raise your doubts. Okay, now what about this tax liability of Mrs. Gupta? Now let's read the last point. Total income between 5 lakh to 10 lakh attracts the tax rate of 20 percentage. It means, first of all, I have to write down here my total income is more than 5 lakh rupees. Okay, but up to 10 lakh rupees. And my tax rate will be 20 percentage. So, first of all, 5 lakh earlier calculated, 10 lakh minus 5 lakh earlier calculated. So the remaining amount will be 5 lakh rupees. Tax liability will be 20%. So total tax, if my total income is 20,000, sorry 10 lakh rupees, then I have to pay the tax of 1,12,000 rupees. 1,12,000 rupees. So now in case of Mrs. Gupta, here one line will be added. Why? Because her income is more than 5 lakh rupees, but up to 10 lakh. So here 2,000 rupees multiplied by 20 percentage. So 400 rupees tax payable. 400 rupees tax payable that we will calculate over here. Here it will be just 2,000 rupees. Why? Because it is your total. Up to 2 lakh, no tax. 2 lakh to 2 lakh 50 to 5 lakh to 2 lakh 52,000. Here 2 lakh 50,000 only. If you do this total, 2 lakh 50,000 plus 2 lakh 50,000 plus 2,000, it total will be 5 lakh 2,000. Now, tax liability 20 percentage, 2,000 multiplied by 20 percentage. So 400 rupees tax payable. Now, one twist here. The benefit of rebate is available only for those whose total income is less than 5 lakh 5 lakh rupees. So the benefit of rebate is available only for those individuals whose total income is less than 5 lakh rupees. If your income exceeds 5 lakh rupees, then you will not be eligible for this benefit. So in this case, Mrs. Gupta will not get any benefit of rebate, and total tax payable will be 12,500 plus 400, 12,900 rupees. Rebate will be nil for Mrs. Gupta. Here it is given. Those individuals whose total income is more than 2,50,000 but up to 5 lakh rupees will enjoy this benefit. Resident individuals in this slab only enjoy the benefit of rebate. Okay. Rest of the individuals will not get the benefit of rebate under section 87A. Okay. So this is the most IMP part. If, for example, if total income of Mr. Raj is 5 lakh 5,000, then he will not get the benefit of rebate. Okay. Clear class? So this is all about 5 heads of income, rebate, computation of total income. Please write down whether it is clear or not. Is there any doubt? We will revise this point once again in next lecture. What is how rebate will be calculated. Okay? Not to worry. So it's already 11:46. All of you are requested to write down the enrollment number. Thank you. Welcome all of you.